Hello there, Ryan Haley with Atlantic Shores Sotheby's International Realty coming to you again. Here it is September 24th, 2020. As I keep saying every month, I feel like every single month keeps going faster and faster. I can't believe we got through the summer. Second day of fall here in Ocean City, and everything is good. You know, we had a good summer. As I've continued to tell you during these updates, we see a very vibrant real estate market, and as I'm going to share with you in a few minutes, there's been some great signs in the overall economy as well, and then still some question marks, which are to be expected and that we're going to have to work through. But here it is, September 24th, and I'm coming to you with this month in housing here for Ocean City and Worcester County. So what I like to do during these segments is break down our local market, take a look at the overall economy, and then look at the national real estate market as well. So today I plan to start locally here. And the graphic that I've shown you a number of times over the last few months is a snapshot as to what has gone on in the last 7 days here in the Worcester County real estate market. And when we look at our inventory levels, we've had 17 coming soon properties, 72 additional properties that have gone actually active into the MLS. The coming soons are the ones that are in anticipation of going live, and then the 72 actives are the ones that are actually on the market. So that totals 89 new properties hitting the market in the last 7 days, adding to our inventory. And then when we look at how they are being absorbed and the buyers and the contracts that have come in. So we've had 27 properties that have gone active under contract. So that typically is a property that has a contract, but there might be a contingency in that sale. So 27 of those and 74 pendings within the last week here to total 101. So 101 new contracts, 89 properties that have come on the market. So what does that mean? We're still seeing less inventory compared to the demand of the buyer. So sales are outpacing opportunities of new listings and or inventory. Not quite at the level. That's the one thing I do want to mention here. It's not quite at the level that we have been seeing throughout most of the summer, which was a 2-to-1 ratio, 2 contracts for every property that came on the market. So that is a little bit less here in this last 7 days. Now, when we actually look at what has gone on in the Ocean City market, specifically over the course of the last month here, we have had, currently right now we have, when you combine active and coming soon properties, there are currently 289 properties within the 21842 zip code, the Ocean City zip code. And when we look at pendings and active under contracts, there are 332 currently in the 21842. Sold over the last 6 months, 984 properties in total, and that's a pace of 164 a month over the last 6 months, which are really the COVID months. So when we break that down, we take the 164 average a month into the current 289 we have on the market. That gives us a 1.7 month supply of inventory here in Ocean City. And the way I always like to explain that is if nothing new came on the market today, within 1.7 months, we would sell out of everything. Now, fortunately, we all know we're continuing to put new properties on the market, but the demand has just been so strong that they're getting gobbled up almost instantly. So 1.7 month supply down from the last month report that I had given you. I believe we're at 1.8 during that market report. So 1.7 months. Ocean Pines, another area I like to look at, neighboring to us here in Ocean City, currently have 40 properties that are active for sale and or coming soon. 93 pending properties. So 93 properties that are pending and or active under contract. The last 6 months, we've seen 283 homes sell in Ocean Pines, which when we divide that out over the 6 months, we're averaging 47 properties every single month that are going to sell. Keeping in mind, we only have 40 available today. So that is less than a 1 month supply. It's 0.85 months, down from 0.9 last month. So the market has continuing to improve. as far as overall demand and inventory. And when that happens, typically what do we see? We see prices start to increase. And we've definitely seen that. Definitely still a strong seller's market. You know, depending who you're talking to, if they ever start to say that right now we're in a buyer's market, that's definitely not the case. Great opportunities for buyer if they move quickly, but it's certainly a seller's market. Anything under 6 months supply is typically considered a seller's market. So I did want to touch on briefly here prices in the Ocean City market. And what we've seen, one of the beauties of Ocean City in our market here is that we truly do have something for everybody when it comes to pricing. They're entry-level condominiums right now that you can get right at $100,000 all the way up to a $12 million direct bayfront property in West Ocean City. So there truly is something for everyone. And with that, our prices have always remained more affordable than some of the surrounding communities. So currently today, for 2020, the median sales price in Ocean City is $275,000, which is up 3.8% over 2019. So prices are definitely increasing, as we mentioned. Just wanted to give you some additional year-to-date stats, which I think are interesting. In 2020 here in Ocean City, we've sold 1,164 properties, and that is up 15.7% over 2019. Average days on market right now coming in at 87 days, which I actually think in most cases it's less than that, but that's factoring everything that's been on the market from the high end all the way to the low end. So 87 days on market currently. So just touching on value a little bit, buyers are saying to me sometimes, you know, we're frustrated. We keep seeing the prices go up and everything that we see coming on the market is going instantly. I anticipate that this is going to be the case for some time. I think we're going to continue to see prices inch up as long as we continue to have the demand and inventory situation that we have. One thing and one benchmark that I like to go back to is really looking at where prices were in 2004, 2005, 2006, and even parts of 2007. Those were the peak levels that we have seen and a completely different environment when it came to the mortgage world. We have not yet achieved those numbers. You know, our prices are not back to those levels where many parts of the country are. So with that, I believe we've got some room. There's definitely still equity in a lot of these properties, and the signs are that we should continue to run for a period of time here. So very encouraging here on the local level. Now, switching over to the national level, I'm going to be putting these slides up on the screen here for you and or some bullet points. But one thing, when we look at the overall economy, the U.S. economy and labor markets are recovering from the coronavirus-related downturn more quickly than previously expected. Economists said in a monthly survey, business and academic economists polled by the Wall Street Journal expect gross domestic product to increase at an annualized rate of 23.9% in the third quarter. That's up from a previous estimation of 18.3%. And that was put out by the Wall Street Journal. So keep in mind, we're coming out of a recession in 2020 here, obviously created by the coronavirus impact. But to have that upswing definitely points back to some of these early episodes that I did on This Week in Housing, where we talked about the different types of recovery, whether it was going to be a W, was it going to be the Nike swoosh, was it going to be a flat line, or the one that we talked about the most, which was the V-shaped recovery. And I do believe, I know for a fact, in real estate, that's exactly what we saw. We saw the quick V hit very low, but then bounced back very quickly. And based on what a lot of the economists are saying, they expect that to be the case also when it comes to the overall economy. Another one I like to look at here is unemployment rates. Obviously, there's certain segments of the economy that are doing very well. There's other segments that are continuing to struggle. And I just wanted to show you this graphic here as to what we saw when it came to unemployment rates month over month. And you can see at the beginning of the year here in January, unemployment rate was 3.6%. Right before the shutdown in March, we were at 4.4%. Fast forward to the next month of April, spiked up 14.7% was the high in unemployment during the peak of the shutdown. And every single month you can see it trending down. 13.3 in May, 11.1 in June, 10.2% in July, and here in August at its lowest level of 8.4%. So all good trends as we continue to see unemployment decrease. Obviously not out of the woods. We're not back to where we were at the beginning of the year. So the next slide, what we just recapped there was what did happen. And then this next slide comes to us from Wall Street Journal survey of economists and their projections. And this is a projection over the course of the next 4 years here as to what we believe, what they believe unemployment rates are going to look like. So currently at 8.4%. They're projecting in 2021, we'll see those numbers continue to improve and get to 6.3%. In 2022, we're looking at 5.2% unemployment. And then by 2023, that's really going to be when we get back to the numbers that we saw pre-COVID, pre-shutdown. And they're projecting 4.9%. So, yes, we've seen some great things here in the economy, but I think this also shows that we've got a couple years here till we can possibly get back to where we were pre-COVID. So, moving forward, with regard to the real estate market, what are the projections that the experts are saying will happen when it comes to pricing? So obviously here in Ocean City, we've seen an increase in pricing. I just said a minute ago, based on the current supply and demand, I expect that to continue on. But what are the experts saying for the country? What are they saying when it comes to the overall real estate market? So I thought this was very interesting. And if you look at Fannie Mae, we all know Fannie Mae, government-backed or government entity here backing our mortgage securities. 4.4% is what they are believing we'll see in appreciation in the next 12 months. NAR, the National Association of Realtors, projecting 4.3%. Zillow, 3.6%. Freddie Mac, a little bit down from what Fannie thinks at 2.3%. CoreLogic at 0.6%, and then Haas, which I don't even know Haas, and I'll be 100% honest, I have no idea who that is. They're at negative 1.1%. So the majority of the experts are definitely forecasting we're going to continue to see appreciation in the next 12 months. And then why are we seeing appreciation? It comes back to what we talked about here locally, which is the inventory. Inventory is the big conversation that we're going to continue to have, and honestly, we've been having it probably the last 12 months. Even before we saw the market really take off, we were experiencing record low inventory levels. So I wanted to put this graphic up here on the screen for you to see as a country, where are we at when you look at the inventory year over year. And obviously being right here in Maryland, I focus on us first, but we're one of the extreme red states here that has the biggest change in inventory. And currently for 2020, actually year over year, so from day to day, we're down 52.2% in inventory versus where we were just a year ago. Now, that doesn't necessarily mean that there's been an extreme or 52% decrease in the number of new listings that have hit the market. That's not the case. Our listings, we've had a good number of listings hitting the market. It's just the fact that demand is outpacing it. So our current inventory levels have been squeezed, and based on these current inventory levels, compared to where they were a year ago, down 52.2%, which is just amazing. If we look at to our neighbors here to the north, which we also cover all of Delaware, down 43.2%. So here in our local markets, definitely seeing that effect of the extreme low inventory levels, which then is causing prices to rise. In the last slide here I want to share with you is something I find interesting. When we factor in prices increasing, but still having better affordability than what we did a year ago. So this graphic here shows, this is using a 5.5% increase in home values over the last year based on what CoreLogic has reported. So CoreLogic is stating that over the last year we've seen a 5.5% increase in home values over the last year nationally. And so based on that, if you had a mortgage last year of $250,000 and the interest rate at that time was 3.73%, that would give you a monthly mortgage payment with P&I of $1,154. So fast forward to today, prices have gone up 5.5%. So today's mortgage amount would be $263,750. And based on our current mortgage rates of 2.87%, your monthly payment, principal and interest, would actually be $61 less at $1,093. So even though prices have increased, your ability with the interest rates being low to actually make your payments be more affordable are greater today. So that's what's really driving many of the buyers to come into the market and want to take advantage of these extremely low interest rates, which, based on what I'm seeing, look like are going to be in play here for the immediate near future. So there you have it. I know that that's a mouthful and I gave you a lot of information, but I just like to put the facts out there for you to see truly what's going on, not only locally here in our marketplace, the overall economy, but then the national picture when it comes to real estate. So should you have any additional questions on any segment of the market, it would be my absolute pleasure to assist you in any way that I can. Till next time, I'm Ryan Haley. Make it a great day.